Hello everyone, welcome to the IchimokuCharts.com daily analysis for gold for Wednesday, July the 29th. Well, another red body candle today, and the red body means that the bears have made net negative gain on the day from the open to the close, and we have a continuation of the first time frame downtrend. We have a lower high and a lower low, and that downtrend began yesterday with a very large red body candle. Now, the candle of the size of the body has reduced fairly dramatically, which means that the bears aren't making as much net progress as they made yesterday, but yesterday was quite an exceptional day's trading, with the bears being very, very strong. Now they're not as strong, and that's little wonder because, as we've highlighted yesterday, we looked to the bottom of the Kumo to act as an area of support. Initially, we were looking to the Kijun-sen to act as support, and that's failed to act as support. The market has traded right down through there and failed to close back up above the Kijun-sen, and the market's closed down below the Kijun-sen. But if we look at the Kumo, this part here, the bottom of it, the market traded down outside of the Kumo, but the buyers came in and bought the market back. Not very substantially, but they've brought it back to close back up in the Kumo. Now, we also know that when the Kumo turns flat, it tends to be an attractor of price action, and that's what's happened here. The Kumo has attracted the price action. Now, because we're in a downtrend, we expect the downtrend to continue, and what we should be looking for here is a breakout below the bottom of the Kumo. And the odds are that that will happen. The market is first time frame bearish, and we'll be looking for the low of the current candle to be taken out. We'll be looking for the Kumo to be taken out. Now, just a word of caution. When we have a flat Kumo, we tend to get false breakouts. So whether we decide to go short on a breakout like this, it remains, well, it depends on your how risk averse you are as a trader. If you're risk averse or very risk averse, you'd be very careful of taking a breakout below a flat Kumo. It depends on how bearish the candle is. If the candle is extremely bearish, then you may take a short trade. If the candle is not bearish, then you'd be very wary of it. So just be aware that flat Kumos can be dangerous for trading breakouts. Now, looking at the other indicators, though, the Kijun-sen is below the Tenkan-sen, which is giving us a mixed signal. Generally, when we have that configuration, the market is bullish, but we've got a readjustment of the market here. We're trading within the Kumo, which means that the market is neutral. The green line, which is the Tenkan-sen, is pointing down, which means that the market has downside momentum, and that's reflecting this first time frame downtrend. The market is trading down below both the Tenkan-sen and the Kijun-sen, which is negative. So we're getting a lot of mixed signals here. Because the market is trading within the cloud, any of the signals that we might be getting are neutral. So not a very good market to trade at the moment. I would be very, very wary of this market. Now, if this downtrend does terminate here, and there is a possibility of that, then we need to look to the high of the current candle for that to be taken out. But we have resistance above there. The first area will be the Tenkan-sen, but in this configuration, I doubt that will hold as a very strong area of resistance. But we have the top of the cloud or the Kumo, and that will act as resistance, and that's at around 945. So we have a natural boundary for this market for the next few days. But overall, though, the trend is down. We need to look for any breakout down below the Kumo.